Welcome to Factful Finance, where we transform complex financial concepts into actionable steps you can use today. Now, let's start with something that might surprise you. High earners, despite their income, often miss out on critical tax strategies that could save them thousands of dollars every year. How? Well, the tax code can be complex, and not all deductions and credits are obvious. But that's where today's video comes in. We're diving into tax strategies specifically designed for high earners, and how you can maximize deductions and credits to keep more of your hard-earned money in your pocket. Before we dive in, just a quick reminder, the information we're sharing today is for educational purposes only. We always recommend consulting with a tax professional for personalized advice tailored to your specific situation. Now let's break it down. First up, the income tax brackets. High earners often face higher tax rates, but this doesn't mean you're automatically stuck paying a huge chunk of your income in taxes. The U.S. tax system is progressive, meaning that the more you earn, the higher your tax rate on additional income. But here's a pro tip. Just because you're in a higher bracket doesn't mean every dollar you earn is taxed at that rate. In fact, with careful planning, you can reduce your taxable income in ways that effectively lower your overall tax burden. Here's an example. Let's take Liam, a tech executive earning $500,000 a year. He's in the 37% tax bracket, but he doesn't just accept the full tax hit. Liam uses tax-advantaged accounts like his 401k to defer taxes. By contributing $19,500 or $26,000, if he's over 50, he lowers his taxable income, bringing it down from $500,000 to $480,500. Next, we have deductions. High earners can take advantage of several strategies to reduce taxable income. And the key here is understanding which deductions are available to you. For instance, you've probably heard of itemized deductions. These are the deductions you can claim on things like mortgage interest, medical expenses, and charitable donations. But don't overlook above-the-line deductions, like contributions to a health savings account, HSA, or a traditional IRA. These deductions directly reduce your taxable income, meaning they can save you more money right away. Let's go back to Liam. Last year, he made a charitable donation of $10,000 to a nonprofit. He also paid $20,000 in mortgage interest. By itemizing these deductions, Liam brings his taxable income even lower, which can significantly reduce the amount of taxes he owes. Now, on to tax credits. Arguably one of the most overlooked ways to reduce taxes. Unlike deductions, which reduce the amount of income subject to tax credits directly reduce the amount of tax you owe. One example is the foreign tax credit. If you're earning income abroad or paying foreign taxes, this credit can offset the taxes you've already paid to another country. Another example is the child tax credit. While it's more common for families with lower income, high earners with children can still qualify for partial credit, especially if they have a strategy in place for their overall financial picture. Then there's the tax loss harvesting strategy. This one's a bit more advanced, but it's worth knowing about. High earners often have investment portfolios, and if those investments lose value, you can offset the gains elsewhere in your portfolio. By selling investments at a loss, say if Olivia sells stocks that have dropped in value, you can use those losses to offset capital gains taxes on other profitable investments. It's a powerful tool for minimizing the taxes you pay on your investment income. Speaking of investments, another strategy for high earners is to focus on tax-deferred accounts. These accounts, like traditional IRAs, 401ks, and 457 plans, allow you to defer taxes until retirement when your tax rate may be lower. This can be a game changer for people like Benjamin, who's looking to maximize his savings for the future while keeping his tax bill low in the present. For high-income earners, a Roth IRA might seem out of reach due to income limits. But here's the thing. You can still make a backdoor Roth IRA contribution. By contributing to a traditional IRA and then converting it to a Roth IRA, you can sidestep income limits, allowing your investment to grow tax-free. Just be careful. This strategy requires some detailed understanding of the rules around contributions and conversions. Finally, there's the powerful strategy of tax-efficient investing. This involves choosing investments that minimize the tax impact on your portfolio. High earners often have enough income to be impacted by taxes on dividends or capital gains, so focusing on tax-efficient assets, like municipal bonds or tax-efficient mutual funds, can keep more of your returns for yourself. This is something Henry, a seasoned investor, focuses on to ensure his portfolio is optimized for both growth and tax efficiency. Now, you might be thinking, this sounds like a lot to keep track of, and you're right. That's why it's crucial to have a tax professional on your team who can help you navigate these strategies and keep you compliant with tax laws. In fact, many high earners consider a tax advisor as part of their overall financial strategy to stay ahead of the game. And while these strategies are useful, there's one final thing to keep in mind: staying proactive. Taxes aren't something to address only at the end of the year. By planning ahead, by contributing to tax-advantaged accounts, making charitable donations, and implementing tax-efficient investment strategies throughout the year, you can maximize your savings and reduce your tax burden. So what's your first step toward maximizing your tax strategies as a high earner? Maybe it's contributing more to your retirement accounts or exploring tax-efficient investments. Whatever it is, let us know in the comments below. We'd love to hear how you're planning to optimize your finances. Thank you so much for joining us today on Factful Finance. If you enjoyed this video and want more tips on how to make your money work for you, why not hit that subscribe button and click the bell so you don't miss out on any of our financial strategies and tips. We think you'll find the next video shown on screen particularly interesting. It could help you level up your financial game. Stay financially savvy, and we'll see you next time.